Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. In this video, I want to go over the SPY and Google trades that I gave out live to the CFO Swing and Watch members in the private CFO Discord. So 2 day trades were taken for SPY, 1 to the downside and 1 to the upside. The first SPY day trade to the downside resulted in a 45% return, which eventually gave over 110% plus return. And then the second SPY day trade to the upside resulted in a 45% plus return that was a perfect exit at that current time of the day. And I will explain why. And last but not least, the third was a Google swing trade that resulted in a 180% plus return since yesterday, which eventually gave over 220% plus at the highs of today. Now, the only reason why I am giving you guys the eventual returns that could have been achieved for each trade is that you won't always be so perfect with every single exit on every single trade. No matter how perfect your game plan is and how much discipline you exert, the market will always find a way to make you think that you screwed up by not holding onto your trades. And as I've said in the last recap video, greed will kick in. It's so much better to protect your gains and preserve your capital, especially after returns like that are made. So, with that in mind, I will be giving you guys a sneak peek of the CFO Discord channel to give you guys the specific time of entries, exits, and option contracts used as I did in the previous recap video. Alright, so let's first talk about the Google swing trade. So yesterday, I realized that Google was not participating at all to the overall bounce and intraday rally in the overall markets. So if you just simply take a look at the daily candlestick from yesterday on Google and compare that with SPY's daily candlestick from yesterday, there is a very clear and distinct difference. SPY had a huge rally off of lows and it was able to reach the previous candlestick's close as well. And if you go back to Google, there's a large gap down, a very good bounce at the daily 10 SMA, but it didn't really show any type of that intraday rally from the lows that SPY showed us. So this is where we got in using these contracts. So at 10:46 a.m. yesterday, I sent this message. Google day trade or swing trade 95 call contracts that expire on January 27th. So these are weekly expirations. So if I go on the 15-minute time frame and I translate that time of the message, we got in right here where this arrow is pointing at. So we got in over and above this intraday level of support at 94.50. And so after the entry, we continued to see a very slow move higher as we were definitely in a textbook uptrend with higher highs and higher lows. But thanks to the overall market moving higher from Tesla earnings after hours, Google finally decided to stop being a laggard and decided to participate with the markets overnight and flew over to $97 as seen on this first 15-minute candlestick of today. And that gave us nearly a 1-to-3 risk to reward ratio overnight swing trade. Remember, our entry was a little over 94.50 just for confirmation as usual, and our exit was right underneath 97%. So this resulted in a great 180% plus return for our members. Now, with this amazing swing trade out of the way, let's talk about those SPY day trades that we executed today. So, yesterday, I game planned with everyone as we monitored the overnight futures market. And eventually, I ended that game planning by telling everyone this. So at 12:17 a.m., I know it's at midnight, I said SPY day trade 402.50 or 404 strike call contracts with a weekly expiration just like for the Google swing trade if we bounce at 400 or move over 401.20. Now, in hindsight, those two levels worked out perfectly because it was how we based our profit targets for that very first day trade to the downside. And when we were game planning, I reminded everyone that our SPY targets to the upside were 402, 404, and eventually 408.50. Now, keep these three levels, 400, 404, and 401.20 levels in mind, because it will be very important for how we structured our day trades. It will be very important for you to understand how we structured these day trades. So, as the market opened up, we got a very strong push over 403, which was a very huge level of intraday resistance. And it clearly looked like we were heading toward 404. And we definitely did that as we hit a high pivot point right after market open at $404.07. So once we did hit that 404 level, we continue to hit that 404 multiple times. So I will switch to the 5-minute time frame to show you guys exactly where this happened. So as you guys can clearly see here, we basically had a micro triple top chart pattern plus a very overbought RSI value of over 80. Specifically 81.66, as you guys can clearly see here on the left side, the bottom left side of your screen. So that allowed us to get in around 403.75-ish as an early entry. Now initially, I wanted to get in once we broke below 403 because that would give us more confirmation. However, I was feeling a little bit more risky. All right, I had a bigger risk appetite this morning. And so once I saw the overbought RSI value of over 80 and this triple top chart pattern, which is inherently bearish, I decided to go in. And that's why I sent in this message for our members. I said SPY day trade, 400 puts for a weekly expiration at 6:33 a.m. And so this is where we got in on this specific 15-minute candlestick, as this arrow is showing you. Right over here, actually right over here. My apologies. Okay. And that eventually gave us that 45% return I initially told you guys at the start of this video. Now, this was a very great entry point because the price continued to move in our favor as it started to fill in that gap up that we got overnight. Now, I hope you remembered those two levels that I mentioned before because we were able to get out right above that 401.20 level for 45% return that I had given to the members last night. So on this specific candlestick. And of course, there was still some room left as the price continued to move lower and lower after our entry below that whole number level of 401 and eventually hitting that psychological level of $400. Now, before I get ahead of myself, let's take a look at the last day trade for this video. So right after we got out of that day trade to the downside, we prepared ourselves to get in for calls since the price held that 401 area perfectly. So if I draw a line here, you guys can see that we retested this 401 support level 4 times after our initial exit on that first day trade to the downside. And so we prepared ourselves to get calls. So we did. So we got ourselves some cheaper contracts, which are these right here. So instead of getting either one of these 402.50 calls or 404 calls, okay, we got into 408 calls that expired on January 31st at 7:05 a.m. And that was this candlestick right over here. And this was quite a great entry because we decided to add again on the same candlestick as we moved slightly lower from the entry point. And then right after that, we decided to lift off back into that intraday 403 resistance level, which is where we decided to get out, as shown on this specific arrow. Why? Well, it was showing a similar micro triple top chart pattern that gave us the reason to get out for our first trade. And I was worried that we would not get another push over that 403 without higher volume. And guess what? We were seeing lower volume on average as we continue to move up higher. So this last day trade gave us a quite perfect exit. And after those 2 day trades, we were done. And after, this last day trade was done, we continued to move lower after rejecting from that 403, which is why, again, it was a perfect exit for 45% plus gains. We made lower highs and lower lows, and eventually we hit that 400 psychological level that I had mentioned last night. And we continued to hold on to that 400 level for the entire day before moving higher in the later part of the day and ending up at 404.74 for the closing price. So we had multiple opportunities to have great percentage day trades. Obviously, we could have had a triple percentage return on some of our day trades. For example, our first trade to the downside, if we had held this little tiny pump up, this very low volume pump up, and if we had held all the way down to 400, we could have gotten, as I said earlier, over 110% plus return on those specific contracts. But again, there's no point, hitting yourself right on the head for missing out. Because first of all, again, this was a very good day trade. we followed our game plans, we followed our price levels, and we followed every single point in our game plan to a T. And the same thing can be said for the second SPY day trade plus our Google swing trade. So don't beat yourself up if you couldn't have held any longer. All right. That is it for this video. If you liked what you heard, please leave a thumbs up down below. And if you're new here, check out the description box below for the subscription link to the CFO Swing and Watch newsletter. Also, make sure you guys check out the other live stream recap videos to continue your learning and trading. And on the top right of this video, I'll provide you guys the link to the playlist, okay? So I have a whole playlist of live stream recap videos that you guys can watch. All right, thank you for watching, and I will see you all on another video.